And so we have this natural forced focus to look backwards as opposed to an optional focus to go forwards. And so what I think is missing is we need to do the compliance piece of all the good bookkeeping so that we can do our tax return. But where cash flow planning comes is turning and looking forward and knowing what you can plan out in your business so that you can make those good investment decisions or hiring decisions or pay yourself more or plan for taxes like we were talking about.
Hey guys, welcome to episode number 218 of the Game On Girlfriend podcast. I'm so happy you're here today. I got to sit down with Erica Goode. Now, she is a CPA, right? Full-on amazing accountant. And she is the host of a podcast for coaches, consultants, and it's all about money. Like, come on, how bad could that be? What I loved about my conversation with her today is we are talking numbers, right? We're looking at why it's important to not be so mad we have to pay taxes. I know taxes are political, all that stuff aside, but as a business owner, when you pay taxes, it means you turn a profit. So how can we manage that and learn how to deal with paying the IRS consistently while paying yourself consistently and having the appropriate cash flow in your business? I love Erica's approach to this. She's very down to earth. She's very realistic. It's so approachable. So if money in your business has been bugging you, right? Or you're like, why does this seem so hard? It could be, I want you to listen for when she talks about this. It could be because you are looking backwards instead of forwards. And it's not our fault we do that. We've been trained to do that forever. So I hope you really listen in for that and pay attention to things that you might be able to change in your business to make things run better. Erica Goode, CPA and host of the Coaches, Consultants, and Money podcast, helps business owners get their money right. She also runs a virtual accounting firm supporting coaches and consultants with bookkeeping, tax planning, and CFO services. She's a former director of finance at Walgreens and started her career as an editor at KPMG. Erica also loves avocados, yes please, and a heavy dose of sarcasm. She lives with her 2 kids and her fellow CPA husband in the mountains of Soda Springs, Idaho. All right, you guys, I'm so excited for you. Pop in those earphones and let's get to it. Erica, welcome to the Game On Girlfriend podcast. I'm so excited to dive into all things taxes and cash flow with you today.
Yes, me too.
It's so much fun. I know people are like, taxes, cash flow. What? It's so exciting. I actually love this stuff so much because it's doesn't it just affect your mood? Like if you feel like the money's off, everything feels like crunchy and hard and stiff. Am I crazy?
I always say the shoulders go up. I can see it in my clients. The shoulders go up and I'm like, oh, they were having that kind of day. And then we talk and they come down and everybody relaxes a little.
It's kind of like, it's kind of like cleaning behind your fridge. Not everybody sees it, but you know if this stuff is in order or not. And it's really important.
For sure.
But Erica, I want to understand from you, can you tell us a little bit about why out of all the things you could have chosen to build a business on, to work on the daily, why is helping business owners with their money and being responsible with this? Why is this important to you?
Yeah. So first, I love talking about money. Like there are some people where they say something and you're like, you think that? Like, oh, you want to, I love the people who are like, I could not sit behind a desk all day. And I'm like, oh, I love sitting behind a desk all day. like let me at your QuickBooks and I just want to dive into it all day. Mm-hmm. And so really I say that because it is just something that I am passionate about. I started budgeting and forecasting when I was 8 years old.
Wow.
Yes. And I didn't realize that until I looked back and I was like, oh, when I wanted that American Girl doll that, you got the catalog, it was $90 for Molly. Yes. And I was like, I want that doll. And I can look back now and I had a cash flow projection of if I saved $10 every 2 weeks for my allowance, then I would, I had the date that I would get enough money to buy Molly. Wow. And I didn't think anything of it. That just made sense to my brain and I enjoyed it. And I hid my money and my what it was, a paper spreadsheet. I had made myself a paper spreadsheet. I folded it up with my money and I hid it in my mom's tea kettle on the hutch. And I thought nobody nobody knew it was there, right? As an 8-year-old, nobody knew
For
it was
sure.
there.
Best
But
hiding place ever.
of course, mom knew it was there. So anyways, the reason I say all that is it's in me. I love it. I love talking money, getting hold of money in like a mental kind of way, like getting our mindset wrapped around money so that we can feel empowered and confident in our decisions as opposed to uneasy and confused about what we should do next.
Yeah, or scared. I think a lot of people get scared. They're almost like embarrassed. They don't understand it better. Do you see that a lot?
Yes. And that's what I just joked about, the shoulders up. I work with, a wide variety of people. A lot tend to be women though. I think women tend to look for other women to talk about money with.
Absolutely. Yeah, I agree.
And I hear from clients or prospective clients like, oh, I got mansplained by my tax guy this past year, or my tax guy wouldn't talk to me unless my husband was there.
Oh my goodness. Really?
Ooh. Yeah. Like, let's make sure your husband's involved. And like, I love my husband. Of course, my husband's involved in all of our conversation, but like, there's this mindset, I think, that we're either brought up with or that somebody's projecting onto us that like, well, you can't handle this on your own. And so then we come, I get clients who come to me with this like shoulders up, half breathing, kind of like, okay, I'm ready to talk about this. I'm like, really? You don't look like you're ready to.
It hurts my heart. That's kind of like the stories I hear about the car salesman who's like, well, where's your husband? It's like, dude, I'm buying this car. It's so fascinating to me, but I do think you're right. I think what we can do to support each other, right, and opening up this conversation is being there for each other like that. I absolutely agree with you there. It just sort of softens the space a little bit enough for all of us to come in and talk about it because it's so critical. I say all the time, money is the most powerful tool we have access to today.
Yeah.
And we really just want to understand how to use it. It's not to be scary. It's to be powerful and awesome and fun, like getting Molly. I think that's so cool. Like, what a great goal, make yourself happy with it. It's awesome.
Yes.
I love that. Now, I know for a lot of business owners, right? And we may or may not have recently have presidents who brag about the fact that they pay no taxes. But how do we deal with this myth, this idea that if you own a business, you should not pay taxes? What do you think about that, Erica? I mean, what is your viewpoint on taxes as a business owner?
Oh, I think you nailed it when you said it was a myth. I think there's so much noise and there does get some big media clickbait of like how to pay zero in taxes and tax credits that'll reduce your liability to nothing. Like we should all pay zero in taxes. So there are some really legitimate ways that companies pay zero in taxes. I'm sure we've heard there are years that Amazon hasn't paid taxes. There are big companies that don't pay taxes, as we've just mentioned. People brag about that. And like, yes, those are true stories. Those aren't fake stories. They are really specific tax credits to really specific industries. If you want to go build massive housing, if you want to go build solar farms, if you want to do if you want to get into micro chips, if you want to start a chip manufacturing business right now, for sure. I'm not your girl to help you with that, but like that is how we navigate the tax code to pay zero in taxes.
Got it.
You and I, you and I's clients, we are likely not in those businesses.
Right.
There are not magical tax credits that we're all missing to let us pay zero in taxes. But I think there's this concept, because we hear about these really unique situations, we assume they apply to everybody and they apply to us. And I'm doing something wrong if I'm paying tax. When in reality, in a service-based business, likely that we're in this virtual space of providing services to other people, the goal is, yes, to pay tax because tax means you made a profit.
Yes, agreed. Yes. Like, oh my gosh.
Yeah.
That's like, we were joking around before we hit record and just talking about how people get so mad when they have to pay taxes, but it's like, that means you made money. That's like not a bad thing. You just want to be aware of it. And again, going back to this idea, if we understand it, you go, oh, so I live in a 30% tax bracket, right? Where we are. And And I'll say, okay, great. So for every $10, 3 goes to the side. That's it. That's all that happens. But I'll take the 7. I'm happy to have this. That's great. Right. And looking at how we can sort of adjust our mindset, is that something that you find you have to do with your clients, is working on the actual mindset of saving for the taxes? Or is it just more they're upset they have to pay them at all?
So there's some people, and I won't bring politics into this, but people have opinions about, well, tax is good, tax is bad, and some varying degrees of that. And sometimes there are people who are just really mad about taxes. That's fine. Like this is not my, not my hill to die on of convincing you of all of the great things that taxes do for us and how much we should be paying for them. But sometimes what I find the biggest problem is we have business. Somebody starts a business and say she started off on year 1, maybe it was even a partial year, and made $20,000 in profit. Okay. She really figured it out. The second year, she made $100,000 in profit. Fantastic. Like we have this big growth swing. Amazing. She made money. That extra $80,000 of profit year over year, she was not prepared to pay tax on. So what happens is her tax preparer then does the taxes and say, oh, $100,000 of profit, you owe $30,000 in tax, which is a real possibility.
Correct.
Depending on what your household tax situation is. Because the funny things about taxes is it's not just our business. If we are married and we file a married return, we are linked to somebody else's salary, right? And that affects our tax bracket too, right? It's not just me starting a quote little business. It's my business now being layered on top of my partner's salary, right? And so that changes our tax situation. And so the biggest mindset shift that we have to work through is not paying tax. It's, oh my gosh, I have a $30,000 tax bill that I was not prepared for.
That's right. Yeah. I think that's what happens, right? Is that initial shock.
That feels awful. I don't know about you, Sarah. Do you like surprises?
Good ones. I would like for someone to say, we owe you $30,000. That would be great. Yeah.
I actually don't like any surprises.
Oh, really?
Good or bad.
Okay.
No. I like a good plan. My husband knows this. He knows to not plan. These stories of I'm going to take my wife on vacation where I'm going to plan the whole trip for and tell her to pack her bag and we're going today. He knows not to do that. Don't do that.
That is not for Erica.
No. So he's really sweet. He'll be like, hey, honey, I have a surprise for you. And my eyes will get really big. I'm like, you do? And he's like, in 3 weeks. And I'm like, oh, I like this. He's like, I'm taking you away for the weekend. And I'm like, and he's like, and I've already planned childcare. And I'm like, this is the best surprise ever. Right. Because I have I'm a person who likes a plan. Right? Yes. And so taking that back to taxes, I like planning with my clients. So the mindset shift is we're not going to wait to be surprised in April when our tax person tells us we owe 30 grand. What I do with my clients is every quarter, we're looking at real-time profit for that quarter, and we're paying the correct withholding as estimated taxes.
Got it.
And so are you going to pay $30,000? For sure. We're just going to break it up into 4 chunks. We're going to talk about it. We're going to wrap our mind around that. This is what you have to pay. And you're not writing a $30,000 bill with penalties at the end of the year.
Right.
We're just managing it through the year and making sure that cash flow is flowing in that way.
Is working with that. Yeah. And I think what's great about that too is that first quarter, there might be a little bit of an initial shock, but then you're prepared for it moving forward, right? So it just becomes part of the business. Like I was saying, you just put the $3 aside, right? So that you're just constantly ready and prepared. So you're doing it, you're taking care of the profit, you're taking care of the liabilities, but you're doing it in a way that works inside the cash flow and that is expected. So it's not so tumultuous.
Yeah. I just had a client we started working together probably 9 months now. And he was, I don't know exactly what he was doing before. He didn't have a fractional CFO that he was working with. And so I came in and we meet monthly and we do this exact thing. We say, okay, let's talk with your tax preparer. We're going to find out exactly what he thinks based on this year's profit. You should pay in quarterly taxes. And so then what I do on my side is we build out all that cash flow projection. And I'm like, here's how much you need to pay in taxes. Here's how much we can put down in your 401k. So we're doing all these big chunk cash flow plannings.
Mhm.
And at the end of the day, we care about how much cash, as this is so natural for all of us, we care about how much cash is in the bank at the end of the day.
For sure.
And that's fine. Like it's a bad way. It's not a bad metric to track. It's a bad way to run a business.
Because you don't know all the moving parts
yes.
that cash might be allocated to, right?
Yes. And so what we do is we look at all of the moving parts and that one metric at the bottom. And so we had this meeting where we planned out everything. And I was like, well, and your cash is going to be, $50,000 in the bank at the end of this month. And that includes your quarterly tax payment of tens of thousands of dollars. And that includes your 401k contribution that we're going to do early this year because you have the cash and that's going to go out the door. And he said, normally I would be freaking out that I only have, because we all have a level of cash that
we do. There's
makes
like
us
a
feel
number.
safe.
Yes.
His was way higher than 50,000. Like he was like, I would normally be freaking out that I had $50,000, only $50,000 of cash in the bank account. Right. And I'm not. He's like, I totally feel comfortable because I can see the next 6 months and the next 12 months and what my business is going to do. And I know what the cash balance in my bank account is going to be every single month of the next 12 months.
It's amazing.
And I don't have to worry because we've talked through this. You've thought through all of the moving parts, and I can make my early 401k contribution and my quarterly tax bill. And there's no surprises, right? No surprises.
Yeah, that's such a big deal. It is the no surprises. And I think it's the predictability of it, right? If we have all the information, we can at least react. Yes. I think it's when we don't know that we get really upset, to your point about surprises. Yeah.
Well, I was going to say, I think so many of us left corporate jobs to do what we're doing. And there is so much regardless of what was bad about our corporate lives.
Yes.
The good things was that there was a lot of financial consistency and financial comfort. Like you knew it was going to hit your bank account at the end of the month, and you knew when you might get a bonus. And that was all very consistent. We never had to worry if we were going to be able to make the mortgage payment.
Right.
And so now we come to do this like out on our own, and we're going to make it. And we haven't taken that consistency with us. And that makes us uncomfortable.
Well, it's a very big change. And I think when I'm working with clients, by the way, that's one of the biggest mindset shifts we have to work on, is how scary and uncomfortable that can be for a while as you start to acclimate to this idea that running a business in the beginning, especially, doesn't mean a consistent income yet. And then learning how to do that through cash flow, understanding how much you should be making as the business owner. And there's lots of theories on that and different ideas, but figuring out how that works best for you, what can give you that level of consistency and what can support that, and what you need to do as a business owner to make sure that starts to happen. It's a lot of moving parts.
Yes.
And I know for you work a lot with people on cash flow as well. What do you think people really need to know about cash flow? What do you think might be missing in knowledge for people who are just starting out?
I think there's so much focus on looking backwards in our money.
Oh, interesting.
And that like everything that is required of us as good tax-paying U.S. citizens has happened in the past. Like we have to submit our tax return and it's all about the past. And so we have this natural forced focus to look backwards as opposed to an optional focus to go forwards. And so what I think is missing is we need to do the compliance piece of all the good bookkeeping so that we can do our tax return. But where cash flow planning comes is turning and looking forward and knowing what you can plan out in your business so that you can make those good investment decisions or hiring decisions or pay yourself more or plan for taxes like we were talking about.
Yeah. Yeah. So it's really understanding how to allocate that money properly. Is that, yeah. And how often do you recommend people look at cash flow and how things are coming in? What is your theory on that, Erica?
I mean, I love a good monthly sit down. I sit down with my CFO clients, and my CFO clients are not, that sounds like a very big term. They're not $1 million businesses. They are generally under $500,000. And we're sitting down on a monthly basis and we're walking through what contracts do you have coming up? What do you know is going to happen in the next 6 months? And we're literally spelling out the inflows And we know so
Right.
much of what's spelling out the outflows because we know how much Calendly costs. We know how much Google costs. We know how much all these things we're paying on a monthly basis. We generally know how much we're going to pay our contractors.
Mhm.
And so when you sit down and actually kind of spell it all out in the next 6 to 12 months, it becomes very clear what we can and can't afford. Because I think sometimes, going to paying yourself, sometimes we don't feel like we can pay ourselves because we don't have a clear view or we can't pay ourselves more. And sometimes that's just not true, that we just haven't spelled it out to say, oh, I could pay myself an extra $1,000 a month more.
Mm-hmm. And that would make such a difference, right?
Yes, absolutely.
Yeah.
And sometimes we just we can't see it in the future, so we can't decide it today. And so and so what I love to look forward, because I think when we can build out the confidence of the future, we make better decisions today.
There's your bumper sticker moment. I swear to God, every podcast episode has a bumper sticker moment, and that was it. I love that. I also think looking to the future, it's inspiring, right? It adds more energy and excitement to the day that you're in right now. And you might take different action today based on how excited you are for the future. And that matters in a business. Yeah.
Absolutely. And I think it gives us something to shoot for too. When we're putting in actual contracts and actual cash flow inward, we know what we're aiming for. Sometimes I have clients who they're like, well, we have this, everybody's got their different scale of aggressive, conservative, what I want to forecast. Well, I don't want to plan on any new business, just zero. I don't want to plan for it.
Right.
Well, is that reasonable? Is that really reasonable in your business? And then I have other people who are like, I want to plan for 200% growth. And I'm like, is that reasonable?
That's I want that. That sounds fun.
That sounds great. Do we actually think that's reasonable? And how are we going to get there? And literally, what is it going to cost to get there?
Yeah, that's what I was just saying. What do you have to spend in order to increase at that point? And then what is the overall profit at the end? And I think, it's so funny. I get hit up all the time, Erica, in LinkedIn with we can scale your business and bring you 85 qualified leads, whatever. And it's like, yeah, but how much is that going to cost? And I feel like that's a question. I love that you brought that up, because I feel like so many business owners, when we're looking at cash flow, aren't understanding, well, sure. I love when business owners are like, I had a 6-figure launch. And I'm like, and you spent way over that to hit that, right? So it's actually a deficit. And understanding how important it is to take those smaller steps in business today to increase actual profit and cash flow later. And I love that you help people look at that, Erica. I think it's such an understated, important thing for us to do. And there's so much to do when you're running a business. It's really easy to let your mind slip on this stuff. And it's so critical. So I really appreciate you taking some time to share with us today.
Yeah, no problem. It was great.
I love it. So I understand you have a free gift for everybody listening or watching today.
Yes, absolutely. So I have a 6 don't miss tax deduction guide for coaches. It works for consultants, counselors, anybody who's going out on their own and just has those questions of wait, can I deduct this or not? Sometimes the answer is yes. Sometimes the answer is no. And that would help you to navigate some of that.
Oh my God, that is so great. So 6 tax deductions
6 don't miss tax deductions.
Oh my God, so good. You guys, we have the link for that. It will be under this video or in the show notes. And Erica, if someone's listening and they're like, I really like Erica's approach to money, I'd love to learn more. Where should people head to find out more about you?
Yes, if you enjoy podcasts, you can listen along at Coaches, Consultants, and Money podcast. I do a weekly show there. And then also you can find me on LinkedIn or Instagram.
Love it. All right, you guys will have those links as well. Erica, thank you so much for spending time with the girlfriends today. I hope we get to talk again soon.
Thanks so much for having me, Sarah.